Hello, this is Dave, and welcome to Equity Story. And you know what? It's Wednesday. I'm all excited. I know the markets are tough, but there's money to be made out there, and we're gonna look at one section again, which is getting really strong record prices. And I think some of those stories are still gonna keep trending up, and that's coming a little bit later. But as we always do, this is just general share advice and not personal advice, as per our beautiful disclaimer here, which you can read. It's everywhere. You can read that disclaimer. I think it's on my forehead sometimes. It's on the website on every page. So just read it in case you want to understand exactly what general share advice is all about, which is important you do. Okay, now we got that out of the way. It's all exciting tonight. We're going to wake up, aren't we, tomorrow morning? And we're going to know, have we gone one whole base point on the interest rates, or is it 75? I don't think it matters. Inflation is very strong, as we said. It's not slowing down. Interest rates at the moment look like they're just going higher and higher. And the question I have to ask you, why is the press, every time I go on the American press, CNBC, it seems to me very, I don't know, it plays it down a lot. It even plays down all the issues. And that is, again, this, I think, largely due to this sort of biased press that we have in America. You know, it was the first time ever we had two negative quarters of GDP, and the Biden government came out to try and say, no, no, we're not in a recession. The press didn't even jump on it and say we're in a recession. I'll tell you one thing, I can guarantee you, if Trump was still had been in charge, you would have seen headlines, recession, recession, we're going down. So you've just got to be really careful what you read. And this is why you need people like us at Equity Story. You need to have independent share advice, because nothing at the moment, I think you see around the world, very little of it is really independent advice. And there's certainly a lot of what you're reading in the press is just got such a bias towards political parties and certain and people's interests. Um, and I'm going to show you a good example about this. I know it's a bit mean because I'm going to bring this. I like Jim Cramer, but he's one of the best analysts in America, and I just want you to see how people can get things so badly wrong. This is Jim Cramer, and I'm going to just pause it a second. He's talking about Bear Stearns, which was the one of the fifth biggest financial institutions in the world back in 2008. And this is on TV answering questions about the company.
Okay, Peter writes, should I be worried about Bear Stearns in terms of liquidity and get my money out of there? No, no, no. Bear Stearns is fine. Do not take your money out. This is real. Look, if there's one takeaway other than a plus 400 somewhere, Bear Stearns is not in trouble. I mean, if anything, they're more likely to be taken over. Don't move your money from Bear. That's just being silly. Don't be silly.
Okay, just so you get a sense of what's causing the agony by this point, I know you've been talking about it. It's financials led by Bear Stearns after what essentially is a bailout from the Fed. Bear Stearns shares are down 90% this morning, and it's not just Bear. Pretty much every single bank is plunging in early trade this morning. Lehman, which is very similar to Bear and its reliance on fixed income, is down nearly 30%. You have big names like Goldman Sachs down 8%, Citigroup down 8%. So it is pain across the board this morning, and as you know, it all emanates from the shock this weekend that J.P. Morgan, along with the Fed, was going to be bailing out Bear Stearns for $2 a share. This is a stock that recently was trading at 80. Last year was trading at 160. It is the fifth biggest bank on Wall Street. It is significant in that it is establishing a price for some of these hard-to-value securities, and as you are well aware, that price is pretty much zero, and that's why you're seeing pain across the street. Now, this also...
So there you go. Right. So, you know, in all sort of Jim Cramer fashion, just be careful. Don't listen to anybody. You got to trust your instincts and you got to trust yourself. And I think this market is very, very dangerous. And what's interesting is that I don't think our market really understands it or believes it. And also the sign you can see this. I was looking at the bond rates, and I'll bring these across to you so you can have a look. Just bear with me. So if you look at bond rates and you go to say USA, for example, right? What you've got is this inverted yield curve. So at the moment, you've got 10-year bonds giving you an interest rate of a yield of sort of 3.29, and you've got the shorter term. Sorry, that's UK. What am I doing? There you go. Right. Didn't think that made sense. Here you go. So you've got the US ones giving you 3.56 a yield, a 10-year, and you've got the 2-year giving you more. So that's the market saying the short term is going to be there's a lot of pain. So I think the Americans are like, hey, we've got a problem. But if you go to our market, if you go to the Australian market, and you've got those 10 years giving you 3.76, you've got the 2 years at 3.34. So you don't have that inversion. So our markets, generally speaking, I think behind the scenes, we're a little bit more confident, and that worries me. That worries me a lot because America sneezes, we all catch a cold. I think America is catching a cold, and we haven't even started sneezing yet. So we do have to be very, very, very careful. And the art of the stock market is first rule, protect your money, and the second rule is we follow these trends, and hopefully we can make some money. But there are a few sections which are doing really well today, and I suppose if you're going to talk about where the money's being made at the moment, we talked about black gold. It's lithium at the moment, and really good auction results. So Pilbara Minerals, PLS, they had their auction results today, and I'll read their prices. What they got? They got $7,708 and $7,708 per metric ton, right? Where last month they got 7,012 DMT. So an improvement. Lithium prices are going higher. I think the lithium story is still alive and kicking, and those lithium stories should potentially, if these prices keep holding up, keep trending. And if you're in PLS, just keep lifting your stop loss. That's all you can do with these stories, and they're looking fantastic. So still, I think the lithium boom is there, but don't forget the lesson. You just watch. These things can turn really, really quickly. So you've got to keep an eye on those lithium prices, and as soon as you see them turn, you've got to get out because they've had a tremendous run. Again, PLS has nearly doubled, hasn't it, since June? Wow. It will come back down to trend because eventually every stock will come back down to trend. Even here when it's had a run, I think I was saying the same there. Eventually it'll come back down to trend, and this will come back down to $3 eventually. So just understand that and don't get caught out if you're making a lot of money in the stock. Really not too much news today. I think BKW, I just had a look at them all. What they did do, BKW, they beat consensus. The NPAT was, I think, around 750 million. They're giving a good dividend. Excellent, I think. I think they're saying for 46 years, this company has upped its dividend or maintained it every year. Hats off. I mean, no wonder they're part of the Soul Patts group. What an excellent company. And they beat consensus as well. Now, why is it not going? I think the market are looking at that and saying, absolutely get it, great company. The outlook, they said the first half of this year looks good. A lot of buildings being finished, but they're sort of, the second half of the year, they reckon it's going to really tail off. So the market's a little bit different. It's sort of standing fairly still. I think it's a long-term play, Brickworks. If you're in it, you're still holding it. But really, in the short term, I don't think it's going to do much. I don't think it's going to trend either too much at the moment. But certainly for long-term play, still definitely a hold. And Soul Patts as well. They came out and they're not trending. I think they've got to get back over 27 for us to be interested in them. But if they do that, we are interested. And of course, they've got big shareholding in New Hope Coal, which has done amazingly. Brickworks isn't too bad. They got Telco and TUA. It's a great company. I think this is the nearest in some ways that we've got to maybe a little mini Warren Buffett, isn't it? But and I know some people involved in this company, and they're good people, and it's got a long history of always lifting their dividend or maintaining it as well. So for me, Soul Pass is one of those great long-term stories that maybe one for the grandkids. You can just buy and hold. Um, and you know what, you've got to put, I think, these sort of stories on monthly charts to give them a little bit, and oh, it is slightly above the monthly trend, isn't it? It's not looking too bad. So definitely for me, I'd be, if I was in Sols, I'd be holding it. Just try and have a look what dividend you get actually on Sol Pats at the moment, and get a feeling for it. It's not, I think it's around 2.5%, not too good, um, but again, I think definitely a long-term hold. CDA, Coden, a little bit in the news today. What they had that from memory. I was reading it, that annual report. That's correct, and they still say their mining uh, equipment is still a little bit under pressure on sales. So yeah, it doesn't look too good. It doesn't look like it's what's it doing on the share price? I think it's just flat, is it? Yeah, just slightly down. So you know, if you wouldn't be trending this at the moment, I think I could argue, in fact, if you're in it now, you're holding it, but you've got to have a stop loss. Come on, if it goes below $6, I think you've got to be getting out of the story. Um, Now, a little interesting story for those trenders out there. You have a look at this one, little FEG. So again, high risk. So I'm just looking at FEG at the moment, and again, in Indonesia, really risky sort of jurisdiction, but they've got a market cap of 88 million. Project's absolutely, it's trending absolutely beautifully at the moment, with anticipation that they're just starting to drill their Woiler project, I think it's called. The market holds a lot of hope. There's a huge amount of gold there, so it's just trending up at the moment. You know, if you're going to trend this now, you're just going to have to put it on a 60-minute chart because it's had a real run, and just trade it off a 60-minute chart. There's nothing wrong with trading momentum like that. And if I was going to trade this at the moment, I'd have a stop loss maybe just under 70 cents. So interesting story and doing extremely well. Actually, I had a look at the 52-week highs, and you know what? Two stories hitting 52-week highs. It's the same old, isn't it? New Hope Coal, absolutely doing beautifully, and PLS doing well. So there's still these little sections, like we said, where hopefully we can make some money. Again, there was announcements from ALY, these sort of stocks that these companies about to start doing lithium drilling. It's funny, they put the announcements out straight away. Everyone reads lithium, they're up 12% for no reason at all. I think one was just like a bit of soil sampling, and the other was, hey, we're going to drill fairly soon. And, LEL, this one worries me because it's in the middle of Argentina. I think it'll be really hard ever to get that business up and running. Link came out, they're down because they're subsidiary in England got fined 50 million. Nothing like a $50 million fine is not looking too good at all. Coles sold some of their assets. I'll just read this because I like Coles. It's a dividend play. If we can get this at the right price, I think it's a really interesting story. So they sold their some of their energy, some of their I think it's their assets they had in So Viva Energy have acquired Coles' largest fuel and convenience network under a single operator. So they bought some of I think their shops in these little convenience shops in these petrol stations, or the rights to them. I'm a little bit surprised, actually, to be honest. Coles sold them. The market don't like it too much. Coles is slightly down, and you could see VEA is up, and VEA market quite liking the fact that they're getting these assets, what maybe the market thinks is a good price. And certainly if you're in VEA, you'd be holding it. But Coles, you know what, if it could get back down to 16 or even 15, I'd be watching this one carefully. There's nothing like a really good staple like Coles if you can get a good dividend out of it. And again, another one of those which I think you need to be looking at is Metcash. Let's have a look at Metcash, how it's doing at the moment. And again, yeah, giving that like 5%. I know it's not trending very well, but again, I think a really staple company like food in supermarkets giving a 5% div in these rocky times is well worth having a look at. Apart from that, really not much else to look at today. Monodolphus, I think there's 160 million new contracts and extension of the contracts. So you can see why that's above trend and trending quite nicely. Possibly if you're in it for long term, it's a hold. Um, Maybe trending, it's a hold, but like maybe what would you do? I'll tell you when you get out of this. If this, I think if this went below, say, use that 12.30, say 12.30 by the end of the week, maybe you'd be getting out of it. But not looking too bad. I thought, again, fairly decent announcement. That's all I've got to say, really. It's pretty quiet, but the main lesson today, these markets are going to go lower. Be careful of the rhetoric you get out of America at the moment. You know, it's not good out there. You might read a lot of articles that say, hey, it's not that as bad as you think. I think that's just politically, the press are very much on the side of the Biden government, and you're not getting a true picture. And apart from that, have a wonderful rest of the day. And you know, behind the scenes, we're here. We're looking for ideas. We're looking for ideas to trend. I apologize, there isn't much at the moment, but coming up, I think in the next 2-3 months, we're going to have that mother of all buying opportunities. I just hope it comes sooner rather than later. On that note, thank you very much for listening to Equity Story, and have a great day. Thank you. Bye bye. Oh, just before I go, it's holiday tomorrow, so see you Friday. Thank you. Bye bye.